Under the kind of scenario where they're really setting up Jerome Powell to be the fall guy for a US recession, it's quite important for investors to note markets aren't really pricing in the prospect of a US recession.
Tapas Strickland, welcome to The Business.
Hello Alicia, pleasure to be here.
Tapas, is there a bit of irony here? Trump's tariff attacks are making it pretty hard for the US Federal Reserve to cut interest rates anytime soon, even if it wants to. So much uncertainty around growth and inflation.
Oh, there definitely is a poetic irony here. The US Fed Chair has said they're very wary about the pressures around inflation, particularly inflation expectations, which are fairly elevated amongst many of the survey measures there, and would really hamper their ability to cut rates if they were to see a greater slowing in the US economy.
I mean, the attacks by Donald Trump on the US Fed appear to be damaging the credibility of US institutions, and that's leading to the degradation of asset prices. Can US institutions like the US Fed survive 4 years of this?
That's a key question. Indeed, in markets at the moment, there's 3 words really to describe what's going on. Sell America, trade, effectively. And it's really that assessment about US institutions, can they withstand the heat coming from the Trump administration? And on Monday, that heat was definitely directed at the US Fed Chair, and amidst threats of whether Trump has the power to force Powell's resignation there. And that's creating a lot of angst amongst investors, and you're clearly seeing that with the US dollar lower, you're seeing US stocks lower, you've seen US yields higher, and the gold price is up about 2%, around $3,500 an ounce. So these are the kind of things that you would see in a country that is not the US. So there is a lot of questions around whether the institutions in the US can sustain the barrage that's coming from the Trump administration at the moment.
Yeah, is this something you would typically see in an emerging market country?
Typically, when interest rates domestically go up, that tends to be supportive for your currency. In this situation, obviously US longer term rates are going up, but you're seeing the US dollar lower. So that's more characteristic of what you would see in more emerging market countries. And so many people have pointed towards that aspect of it to highlight that foreign investors are very skittish at the moment, really embracing that sell America trade, really looking to diversify investment in portfolios, whether that's to reduce US exposure and gain greater exposure to, say, Europe or Japan or the rest of Asia, or whether to actually liquidate some of their US holdings and repatriate those funds to Europe or to the rest of Asia.
What do we know about the legalities around the power Donald Trump has to oust the head of an independent government body like the US Fed?
That's a very good question, and that's something that markets are starting to ask a lot of questions about. And the key reason is it was thought that the US administration does not have that power, and that was what was evident under the first Trump administration. But 2 key changes occurred really over the past couple of weeks. So one, the National Director of the Economic Council there, Kevin Hassett, who was formerly a very vocal supporter of an independent Federal Reserve, he said the US administration is looking into the ability to fire Powell. So that is one really important development. The second one is there's a court case going on in the US amongst the US Supreme Court in regards to 2 other independent agencies, whether the administration can fire some of the directors of those agencies. If the court finds in favour that they can, then that's going to open up the possibility that the Trump administration does have the power to potentially fire the US Fed Chair. Now, that's still very, very early days, but the key aspect here for markets is they're asking that question at the moment. But regardless of whether that court ruling comes out in favour of that, the current US Fed Chair, Chair Powell, his term expires in the middle of 2026. So regardless of whether the Trump administration chooses and has a power to remove Fed Chair Powell, within the next year, they will have to appoint a new US Fed Chair. And then the key question then is, will that new Fed Chair that has to be appointed by May 2026, will that person be sympathetic to the Trump administration's political agenda, and will that start to hamper some of the Fed independence and credibility that has been really well honed and developed over the past couple of decades?
And I mean, does it look to you, as it may do to people in markets, that the US president just wants to establish Jerome Powell as a scapegoat for a downturn or potential recession in the US?
Well, that is one alternative explanation out there, but I think there is a genuine development within the US administration to see whether they do have the legalities to get rid of Powell. But under the kind of scenario where they're really setting up Jerome Powell to be the fall guy for a US recession, it's quite important for investors to note markets aren't really pricing in the prospect of a US recession. When you look at betting markets such as Polymarket, they're pricing in about a 50% chance of a US recession in 2025. So if the US administration is setting up Jerome Powell to be the fall guy for a US recession that they think is much more likely, then that has some pretty vast implications in terms of forward earnings estimates for a lot of US companies out there. So you'd see in that scenario further downside risk to risk assets, particularly in terms of US equities.
And I mean, bond sellers played quite a big role in Trump pausing the so-called reciprocal tariffs for 90 days. Could those same bond sellers save Jerome Powell?
It's possible, and I think the key thing to highlight is it's a very uncertain environment, and markets will be reacting and also testing a lot of the limits in terms of Trump's authority here. But the key thing to note is in order to restore US credibility in terms of policy making, particularly in terms of US institutions, there has to be some limit to Trump's presidential powers here being shown by either the Congress or by the courts. So far, you've had the Congress pretty much acquiescing to a lot of Trump's policy agenda. You've seen the courts pretty much acquiescing to Trump's policy agenda there. So for international investors, they're still very uncertain in terms of, well, what are the limits in terms of Trump's presidential powers, and is there some kind of sovereign risk out there in terms of US assets?
Tapas Strickland, thank you so much.
Thank you. Thank you, Alicia.